Welcome to the Financial Game Plan with Hannah. Welcome to the Financial Game Plan with Hannah. I am your host, Hannah Burchett, and today I have an amazing guest with me. This person is someone that I have now met 3 times, I believe. I met you first, Mr. John, at I want to say MM5 in Orlando. Then I met you again at the Best Ever Conference in Utah. And then I ran into you a third time at Dealmaker Live in Dallas, Texas. Mr. John, welcome aboard.
Well, thank you, Anna. I appreciate it. It's a very gracious introduction. I really appreciate it. It's good to talk with you and catch up with you yet again, which we should do this more often.
Yes, 100% we should. So please, can you introduce yourself, your company, what you do, W-2s, real estate interest? Just tell me everything about you.
Okay. I'll try to keep it brief.
You got this. We got plenty of time.
A full-time real estate investor. I do syndications. I find multifamily properties and find other partners who want to invest in them with me, and I will stay with the property and operate the property and find property managers. My particular strengths in the whole operation is in sourcing and underwriting. I also like to do asset management, and I can participate in the investor reporting and relationships, and I like capital raising and all those other aspects about it. I'm definitely hands-on in all of the different aspects of real estate. And I started buying multifamily property about 13 years ago. I started looking at properties in another part of my area just so that I could have something and learn about it. I bought small properties, a 3-unit and a 4-unit, not too far from my home. And I was the property manager and essentially did everything. I would go down and fix the properties, and I wrote leases, and I wrote ads for tenants, and I interviewed tenants and placed them. And when the tenant had an issue, I was the one that they called. And sometimes I had to leave my home to go down and fix problems, but little by little you learn things. You learn how to hire somebody to do certain tasks, and you learn how to find better tenants, and you learn where you're adding value in a property, the things you can do to add the value. And I did that with those properties. I sold them after a little while. I bought larger properties and had professional property management come in. Again, not too far from my home, but I realized through that exercise that I don't need to have a property right down the street from me. It can be really anywhere, wherever the market is good around the country. And so I started thinking about other areas, and then bought properties back east. So I'm from Seattle, as you know, and I bought properties on the East Coast, the Southeast. I tend to like the Southeast. I think that's where population migrations are going. And I focused in that area, bought property and started syndicating. First syndication was in South Carolina, and have since syndicated in other areas, including a lot of Midwest markets. I like a lot of the Southeast and Midwest markets. I tend not to favor the highly competitive markets, but I do like places that have good, strong population growth, the emerging markets. I've taken training and coaching and developed an extensive network or contacts and friends. Just make a lot of friends. As you know, you make good friends in this industry. I had a lot of people who started off early or started off helping me at an early stage and sharing so much information, and they were just huge resources for me, and they're still friends today. And so I figured this is what we have to do. Have to share with other people. And so I'm a big believer in that, and teaching and sharing the good experience as well as the bad. I had a W-2 job. My job has been in software technology, information technology. I worked for other companies and had my own business for a year. I wrote a software product back in the 90s and developed myself, and went out to people who I knew, and they became my first customers, and grew a company around it, and had that company for about 10 years, and sold the company, and then went to work in other businesses, specifically IT consulting, and had been doing that up until about 2 years ago. And then I left that work and have been doing real estate full time now. I'm almost full time. I wouldn't say I do 40 hours a week, but I do what I like and when I like to. As I mentioned to you before we started, I took a trip couple weeks, and fortunately I can take the time off to do that, check emails periodically, and the great thing is in real estate, you're still getting paid. And so have entered a new phase of my life where I'm doing only the things that I enjoy, which is real estate and a few other things, and carried on progressing from here. That's hopefully the short story.
You make me so happy. I love that you have had this fulfilling career, free real estate. You did something amazing, and that's wonderful. But now you get to do something equally as amazing and also just as wonderful. You get to do what you want when you want because of the investments in yourself and the investments in your properties are making you money while you are on a massive vacation. That's spectacular. It's something to be truly proud of. I think it's wonderful. That's truly fantastic. That's awesome.
Yeah, it's one of the many benefits of real estate investing and ownership. I mean, the list is long, but I think that's hugely valuable. Being able to choose your hours and choose where you work and how much you want to put into it. It's really up to you.
That's fantastic. Can you tell me about the sign I see back there, Cardinal Oak? Can you tell me about that?
Yes, my company, Cardinal Oak Investments. I there's not a lot of hidden deep meaning around it. I just chose some that I thought resonated, and me being an IT person, I grew up when the internet started. I mean, prior to that, of course, but when the internet started and people chose domain names, and to me, a domain name like something.com, the something has to be memorable and be able to say it without having to spell it out every time. And there's some attributes around this name that I thought resonated and would be easy to get a name out of, and nobody had used it yet. So settled on
I
that.
love it. Simple, clean, to the point. That's awesome. Question. You talked about you're from the Seattle area, you invest there, but you also talk about doing some remote investing. You said you like the Southeast, you like the Midwest. Can you tell me about how you chose those markets specifically?
Yeah, yes, absolutely. What one of my coaches is Dave Lindahl. Dave Lindahl's written a book, and he's been one of the most preeminent coaches and mentors and trainers in the multifamily real estate industry. Been doing this for a long time. I would hesitate to guess 20 or more years, and has trained a lot of who we use also as coaches in the industry. And I got my training from him and his organization, and he teaches emerging markets. And so emerging markets are is a concept of certain qualities about a market, the demographics, not just is the population growing, but is job growth growing, what kind of companies are moving into it, and what other opportunities are there. You go to the newspaper, are companies reporting that they're building a new plant in this city or town, and they're hiring 500 people, those kinds of things. And you look at household income, so growing, you look at affordability, you look at housing costs, all those demographics. And certainly a lot of people do that. Dave was one of the early ones, and I kind of that resonated with me. So I've looked at markets. Another thing is places you like to visit, and I like the Southeast. I'm originally from the East Coast, and I like the Southeast, and I like to go there. And they're experiencing. They still are. I mean, unfortunately, the word is out, and so they're very popular markets now, competitive and popular. But I like the Southeast first: South Carolina, North Carolina, Georgia. I avoided some of the bigger markets like Florida. Everybody wants to invest in, and they are good markets. There's nothing wrong with them at all. It's just harder to find good deals in some of those markets. South Carolina and North Carolina have become super competitive also. And after a while, when I was striking out on my offers and my deals, I'd make offers, and I was not even in the top 3 or 5, and I just couldn't make them work. I moved further inland, the southern Midwest tier. I like the major metros in several of those states: Kansas, Missouri, and Oklahoma, Arkansas, Kentucky. The big cities in in those states had good opportunities. They're not small, rural, out of the way towns where there's only one employer in the town, or things like that, or growth rates are flat, but they are strong growing towns. They're maybe not hyper high growth towns like, say, a Dallas or a Phoenix are, but they are still strong growing areas. And the unique thing about this, Hannah, that I see, and you could say this about almost every city or market around the country, is that you look at a city like take let's take an example, St. Louis. It's not really one of my target markets. Traditionally, you think of St. Louis as, well, yeah, there are good things happening there, but it's kind of a high crime city, and so maybe I should avoid it. Or New Orleans, or those kinds of places, high crime city. That's what we tend to hear. But you dig down and scratch the surface of those cities, and they have pockets, like submarkets around every one of those cities. Some are doing great, some are not so. That's what you have to do in these markets, and that's what I've done. Is like any city that you're looking at. I like Oklahoma City, I like Kansas City, and they all have a lot of small towns around them that are maybe doing well or maybe not doing well. That's what you have to find in order to really penetrate these markets, and that's what I've tried to do, is get to know a few of them really well. I'm not really I'm somewhat opportunistic, but I'm not like going out and looking at every single city that strikes my fancy, the next shiny object, so to speak. So I try to see those kinds of markets and the opportunities in them.
So the ones that you do like, what are you doing to see how the economy is growing? Are you just looking at the newspaper? Are you following FedEx.com? What sub-economic information are you looking at to see how that market is growing and where that potential is?
Yeah. A couple of things is I will subscribe to Google alerts about these markets, and I look for new articles about plant openings. If something happens, creating some jobs, I'm going to see it probably the next day. I see a lot of that information. I will proactively go to the local newspaper and look in those areas. But otherwise, you look at Bureau of Labor statistics for job growth activities. You're looking for growth at least around 2% a year. Although I would add that since the pandemic had a big dive in employment, and then most markets around the U.S. showed huge gains after that. And so you might see a 10, 12, 15% job growth over a period of a few months or so. Now that's kind of died down and it's returned to normal. There is still a lot of healthy job growth out there in some key markets. So that's a big one. But yes, you look at news activity about a market. You also talk to people on the ground, especially if you know somebody in the area. One of my markets, for example, is Kansas City. I know a lot of the good markets around there, and I've known markets that traditionally have been thought of as not so great. I mean, Overland Park, Lenexa, Shawnee, Lee Summit, those are good towns, and there's a lot of retail growth in those. Other towns around there, like say Grandview or Raytown or Lexington, they've got a maybe not so great reputation. They've been laggards in the industry. But you know what? I've been there and I've driven through these towns, and I've talked to a lot of brokers frequently, and as well as property managers. And there are good areas of these towns too. You don't want to be too quick to write off these towns just because they're not doing so well. And really, that's the whole idea behind an emerging market. Emerging market is not so much one that's just been this constant, steady growth that, like Dallas, that is just growing and growing and growing for 15, 20 years or so. That they're good markets, but they're not really emerging market. An emerging market is a market that might have been in trouble or not doing so well for a long time, but maybe they elected some new city leaders, maybe a company decided to build a new plant there and lit a fire, and now they've got better roads, they've got more companies coming in to support them, more in the service industry, and and they're growing and there are things happening there. That's when you want to be buying.
I like that. I like that you know exactly what to be looking for. Now, whenever you look in those cities, that's areas that you like, do you have a buy box, a checklist of what you like? I know you said it's fairly opportunistic, but do you have something that you follow for what you like to purchase?
Yeah, yes, some pretty high level parameters. Um, I like a C-class property. I invest in workforce housing. Some
Okay.
that might be a B class as well. Probably not an A class. It's just not what I do. There are great opportunities in those
Hmm.
classes of properties, but the better opportunities I think are in the C class, buying something that has a value add. I mean, really, and I've heard this on podcasts myself, is that every property has value add opportunities. There's a value add on everything, even in A class. That's true, but I like to be able to get in and renovate units and
Hmm.
find old classic units, even if there have been some renovations done already. I like to be able to do that kind of thing. And if, especially if there's out external curb appeal improvements, maybe paint, uh, resurface and stripe the parking lot, maybe plant additional flowers or plants around the property, or some kind of external appearance improvement. That's valuable too. And so value add is a big piece. I will focus mostly between 70 and 150 units or so. And I like for there to be strong rent upside potential. So I'll do a pretty comprehensive comparative analysis. So several different methods of doing that, of course, and everybody's got their own. But you need to know, if you're going to put several $1,000s into renovating a unit, are you going to be able to rent it out at this higher rent level, and how much it is it, and how's that going to impact your the returns that you could offer to investors? And so those are the things. But when I'm talking to a broker, I'm pretty basic. I'm not going to say only this little submarket and that little submarket and that little submarket. I'm not going to tell them that. If it's a city, it's just like, give me anything that in the city that meets this criteria. Class C, 70 to 150. I like pitched roofs. I don't like chillers. Not a fan of mansard sidings and a few other things, but it doesn't mean I'm going to rule them out. I mean, those are negatives, but they're not deal killers. And otherwise, I just like to see what they have. There's not that much coming to the market that you can be that picky as a buyer today.
So, how is the market affecting your purchasing power now? I know we spoke a little bit about this before we started to record, but for the listeners out there, how is the market affecting you?
It's difficult because of primarily interest rates. Of course, this is not news to anybody, but the interest rates eat pretty deeply into your cash flow, and your returns expectations might be dropping a little. Ideally, you're not doing that. You're still looking for the right returns, and you're passing on anything that doesn't meet that criteria. But with higher interest rates, your cash flow is going to be lower, and you get yourself into especially if it's a brand new loan, you're getting yourself into a new loan. You're not going to be able to get out of that high interest rate loan for a long time into the future. Maybe you get a kind of a loan product that allows you to get out of that more quickly, that doesn't have this onerous prepayment penalty, but you're most likely stuck with it. And so that hurts your opportunities to buy. The price you could offer a seller is lower as a result, and the sellers the sellers are not taking those offers unless they have to. And if a seller's in that kind of a position, they're faced with either selling it at a loss, selling it and not making hardly anything off of it since their purchase, or handing it back to the bank. And they're very unpleasant situations to be in. The other opportunities are assuming somebody else's loan. If you've got a loan assumption you're going to do, a property opportunity where the seller does have a loan you can assume, you're probably still having to go out and get more financing, maybe a supplemental loan, because this loan assumptions might be only 50% of the value of the property or less. and then you've got to make it up with your equity raise or a supplemental loan. And all those are possible, but it eats into your returns. And so an assumable loan, it might be a good opportunity. Get a 3.5% loan that was taken out 2 or 3 years ago. But still you've got some equity to make up. So yeah, not great situations to be in. You could talk to a seller about seller financing if they have a lot of equity, but those are primarily deals in smaller multifamily, maybe I don't know what the size parameters are, probably under 50 units or so, 10, 20, 30 units. Those are good opportunities if you can do that. And I am not a snob about units or property unit counts. I think 20, 30, 40 unit properties can be great deals. And I would look at them. They're hard to take out to a syndication group, but they could still be great investments and opportunities that you find. And maybe an individual, like a family or an individual, owns all of it and has not really done a good job operating it. Those are good opportunities too.
I love that. I like that your explanation for that. I know the opportunities are extremely hard to get right now. You talked about the interest rate. The interest rate is what it is at this point. I know here in the South, I'm in South Louisiana, our insurance and taxes are absolutely crippling. I have a couple single family homes and I have an 11-door apartment complex. One of my houses, my note when I took out that loan, I want to say it was like $1,200 and I'm renting it out for $2,400. But our insurance has changed. And now my new note is like $2,000. It's insane
Yeah.
that the cash flow just went from so fabulous to like, I mean, pennies now. It's hard, it's dreadful, and it's just part of the process here. But I know that I'm not the only market seeing that. Earlier, you talked about COVID, but the pandemic. How did the pandemic impact your personal properties?
It didn't impact it that much.
Good.
We were in pretty good shape. Not 100%. We had some tenants that went a long time without paying rent, but they were and you always have this feeling of, oh, they're just being lazy and they don't want to go out and they're scamming the system and all this. And there's certainly a lot of that. That was not the case with us. We knew that they were maybe they could have tried harder to find sources of income, and maybe if the local social service agencies weren't so generous in being able to support them, or the courts weren't so generous in requiring them to stay, maybe they might be more motivated to go out and get a job. But by and large, there were very few of those for us. We had some higher vacancies and a couple of properties, but we weren't killed by it, fortunately, like we hear of a lot of other people. And so it's interesting to see those effects. It's also interesting to see how the demand for properties changed, and I think that might have been more financially motivated, where the federal government, the Federal Reserve, rained dollars down on us.
Yes.
And drove pricing, and where everybody wanted to be in real estate and they anticipated inflation, and you got to be in a hard asset in an inflationary environment, which is very true. But it drove prices. I mean, there were no good deals around. You had to pay a premium, and for people who bought at that time, now they're paying the piper. It's hard to sell a property that you had to pay too much for.
Right.
But yeah, I think pandemic had so many influences, or negative and positive impacts on investors. and we emerged pretty much unscathed from that, fortunately.
I'm so glad to hear that because there were a lot of tragic stories during that time frame, especially in your reading in New York and in different markets. I want to switch gears just a little bit, and I don't know if you're going to remember this conversation. I think I was at Best Ever, the conference from Joe Fairless with you in March. And by the way, when I walked into that very first conference day, I was terrified. That was a huge conference compared to lots of the other ones I went to. I'm
Yes.
excited for the next one. I've already bought my tickets, going back in April. I can't wait. But you recommended a book to me. That book was called dang it, it just slipped my mind. If Who Not How. It's the yellow
Okay.
book. Do you remember
Yes.
that book? Can
Sure.
you tell
Yeah.
me why did you recommend that book to me? I've read
I,
it, but why did you recommend it?
because it was just eye opening. It communicated a message and a recommendation that was just made so much sense that, and especially for me, one of the things that it might have made me stronger throughout my life, but I'm a person that there's a problem. I'm personally going to figure out how to solve it, and I'm going to take the action to solve it. And yeah, the problem got solved, and I feel real good about myself, or I figured it out, and I just a lot of positive things about it. But looking back on those times, I should have done it differently. I spent time figuring out and solving a particular problem, or getting a task done that somebody else could have done better, more easily and more cost effective. And I ended up using time to do that I should have been spending time on something else. And so it's a whole philosophy of, don't sit down and think about how I can solve this problem. Think about how somebody else in your network, in your world, or somebody else you can make contact with can do can find and execute the solution to this problem that more effectively than I can. And to me, I mean, it's the easy. I shouldn't say easy, but the common answer is to get yourself more people who work for you, or work with you, or build up your network. And so I I use a strong. I mean, I use people who will do supplemental work for me occasionally, and I have a virtual assistant now, a person that does work, maybe a higher volume of work, that can be trained to do this work. And I'm thinking of who in my network can do a job, anything along the line, anything that I'm trying to do. And I'm getting I've two highly qualified sons who are and I'm completely serious about this, who are very interested in real estate, but they have full-time jobs and they can't spend a lot of time. But I'm trying to get them up to speed on ways that they can help me if they have a little bit of time in their off hours, or whatever, and want to learn more about it. And I think that they do. That I am trying to get them more involved by having me do little tasks here and there. And so it's it accomplishes different things, but it's really being able to get your tasks done more effectively and quickly, so that you can be thinking about where your business should go. It's there's an old, I shouldn't say old, but there is a common phrase that I've heard in the real estate industry, that you should be working on your business and not in your business. And so it means several things. It means doing things like what I just described. It also means that if you have a property of your own, and there's a repair needed to be done, you're not the person to go do it. You should not be climbing in your truck and driving out to that property and fixing the problem. You need to find somebody else to do that. That's not an effective use of your time. I can tell people to do this, but I also know a lot of very successful people who this is what they do, and who might argue it's just not going to work for me, and I don't think it's the right way to proceed or build a business in real estate.
That was a great overview of the book. It's very much of a work smarter, not harder. I know that my husband and I, we run our properties, and some days when something happens and we have to go run out there and, I don't know, change an air filter, I'm like, we just spent 30 minutes driving one way went and talked to this tenant. I don't, and then the tenant's gonna tell you about their cat who died at the neighbor's house. And I'm like, okay, I can't do all this. It wastes hours of my day. And I could be doing a podcast or doing research, or I could be doing this or that. And what you just said was absolutely perfect. It really was a very good point. Another thing I want to bring up was conferencing. I talk about conferencing a lot on my podcast because I am a huge fan of conferences. I genuinely believe that your network is your net worth. And the more people that you meet, the more friends that you make, the more people you can reach out to when things happen or when you want a guest on a lovely podcast. Tell me about conferencing. I know you also go to them a lot. Tell me what your personal philosophy is on conferencing.
Yeah, I do. I go to them a lot. Been going to them this year. I have at least one more to still to go to this year. And like you said, I'll see you at the Best Ever Conference in
Good.
March, April, or whatever that
April.
is.
It's
Okay,
April.
April. And I do like them. The reason I like them is because I get to meet so many different people who have a similar mindset. You're going
Yes.
into an organization or place where people at least have the interest in multifamily real estate. They might have gotten a ticket for free and they might live right down the street, but at least they're spending their time going to this conference. Most of them have traveled to get there and spent some money to get there. And so it says a lot about them just to start off with. It's an improvement over local networking groups where
Hmm.
say chambers of commerce, which are also good. I can't disparage any of them, but they're more long shots. You might meet somebody once in a while who has an interest. Here, you're going to meet somebody, and they all have an interest, and they have different levels of skill and experience. And some of them might be starting off. It's an opportunity for me to share what I think is so great about multifamily real estate and a few things about how to help them get started. Or it might be somebody a whole lot more experienced than I am, who I would love to learn from, or somebody in between who I might partner with on a future deal. There's all kinds of these people. So I started going to these about 8 or 9 years ago. Started going to my first one and wasn't sure what to expect. That's what happened. As I met people and I'd taken training and I had some experience, but in real estate by then. But you learn so much from somebody's going to tell you something that just made that time completely worth it. And then there are people that you could follow up with again. You learn more from, and you might join together in a deal, and you get to know them. And then you go to a conference again, and you're going to see people again that you met before. And I mean, this is a great thing. It's also maybe not a great thing, but you see people, and I present company excluded. I love running into people that I've met at conferences. But as you know, you've been to a few of them now. You say hi, and you catch up, and you have a lot of nice words, but then you move on. You got to talk
Right.
to other. You got to meet other people at the conferences, but it's all good. I mean, they're good opportunities. The conferences have meeting rooms, of course, and there are speakers, and they're all very experienced, and some of them are very high profile, and they have good things to say. And I like to listen to them, but only to a certain degree. For me, the value of the conference is the people that I meet and follow up with and try to work with again in the future.
Oh, 100%. I'm going to say that I love running into you 3 times because I couldn't believe
Yes.
I ran into the same person 3 times at 3 different conferences. I thought that was so cool. I love to meet the people. I love to mingle. I want to be where everyone is surrounding me is just like me. They think like I do. They want to grow like I do. They know that they have the potential. They also understand that you have to talk to people. You cannot be a wallflower at a conference. You must muster up the courage and go talk to strangers, which is hard, but it's necessary. It is an absolute step towards building your portfolio, building up your friendships, your network. It's something that I don't know. I love going to conferences. I really do. It's one of my very happy things to do for sure. Okay, so we've been talking for a good bit, and I have loved having you on. I have loved hearing everything that you had to say. the last part of my episodes, my shows, I ask all of my guests a series of 3 questions. Are you ready for these questions?
Hopefully I am. We'll see.
You got this. You can do it. All right. So, question number 1 is something on your bucket list. What is something on your bucket list that you would like to accomplish within the next year?
I would like to acquire a 200 unit property. I'm kind of building up to that, and I know a lot of people they buy progressively bigger properties, and I'm kind of in the same boat. It's just I'm not there yet. I've bought properties 100, a little over 100 units, but having enough people in my network to raise the equity is a big part of it, and
Hmm.
me to share my experiences with the brokers in my network so that they can present these opportunities is one of my goals. Big bucket
I
list item.
support you wholeheartedly. I can't wait to hear it. And when you get it, I want a phone call. Got it?
Got it. Yes.
All right. Question 2. What is a skill that you have always wanted to learn?
Playing the piano. And
Oh,
I mean, I have a musical background and have always enjoyed music. It's been an important part of my life, and have played in instruments in different groups, but I've never learned the piano, and and so I've been taking lessons. And when you ask what always wanted to learn, I'm still firmly in that boat. I want to learn it, and I'm not there yet.
love that.
Yeah.
Once you get it, we need a Zoom call, and I want to see you play. I want to listen to it.
Yeah. That's, the funny thing about, I mean, I take lessons. The funny thing about lessons is that I show up at my lesson and I freeze up. It's like, why do I do that? I haven't gotten over that part of it. Playing in front of somebody else is just at a different level.
You're
But
going to get there. I have
I will
faith in
get
you.
there. Yes.
Last question. If you could go back in time and talk to your 18-year-old self, what piece of advice would you tell yourself?
It's funny. I'll preface it by saying I'm in a Facebook group with
Okay.
people from my high school class, and
Aw.
and yeah, it's a great thing, but I just don't know any of them. There's all these people that are in my, I mean, I did a lot of things. I was in the same school district for my whole life, and it's a lot of these people I grew up with. I just didn't take the time to meet them and get to know them. That's what I would do at 18. I would get to know more people in my who I had an opportunity to meet. I mean, even going into college, it's like opportunities I did not take advantage of. And then you're out of college and you're in a small group. No matter how big of a company you go to work for, you're in a small group, and you're not meeting those people. And I'm thinking, I wish that I had done that when I was younger in high school and in college. Is just talk to people. I do it a lot now, and it just makes life so much more fulfilling. And that's what I would have done more then, trying to make up for that now.
I love that. That's a great piece of advice. Okay. John, if people want to get in touch with you, work with your company, work with you, how can people get in touch with you?
Uh, the easiest way to get a hold of us is through a website, learnaboutapartments.com. That'll take you to a whole plethora of other things, but that's the best starting point, including a book that I wrote for my colleagues in the technology industry. You'll have to check it out, see if it might apply to you, and connect with us. You can connect right from that website and read it, some other materials that we have posted on the website, educational materials, and hopefully I can have some conversations with people.
John, you have been amazing. I have appreciated every moment of your time. Thank you so much for coming on.
Well, thank you, Hannah. I appreciate the time. It's
All
been fun.
right. Have a great day. Bye, guys.